Hey everyone, me Kevin here. It's time for an update for all HouseHack investors or anyone curious about HouseHack. I'm going to reveal what our monthly burn is for HouseHack at this point, where we might be able to save money and where costs could change. I'll also make some projections, but I want to be very clear. We don't do projections for HouseHack. I don't tell you how much I think the company's going to be worth in the future. I really don't like projections because honestly, any company that did projections 2 years ago or in 2020, 2021, it was all BS. So I hate that kind of stuff. I just want to make an honest investment opportunity for people who are interested in HouseHack. And as I always have to say, this video is not a solicitation. You have to go to househack.com, read the PPM there. That's a solicitation. But I just want to be very honest. HouseHack is a very simple company. It's a company that I have a lot of great ambitions for, but we're going to do very simple things. We're going to buy homes and rent them out. Now, you might ask, oh, well, how's that similar or different from a REIT? Or how's that similar or different from those companies that let you cut up, slices of homes into little shares and then let you, invest in those? Look, I've answered this in many videos before. You could look at the HouseHack playlist and get a detailed explanation, but let me make it very simple. I don't think there's anybody else in the United States that runs a real estate company like this that buys wedge deals. They buy deals based on the cash flow they think they can get, and they rent them out. Why bother with wedge deals if the equity doesn't really make you potentially more money? To be clear, by more money, I mean more cash flow, right? It's hard to get wedge deals. It takes effort, it takes work, but the actual equity boost increases the value of the company. It increases the amount of deals we could do. It increases our margin of safety, even though it may not necessarily change the cash flow on a particular deal. It's harder to do it, but I think it's the model that should be used in real estate. And quite frankly, I don't see anybody else doing it. And I think we can create a very successful company scaling the wedge deal model throughout America, right? The companies just want AUM and they rent them out. That's why maybe you could kind of say HouseHack is kind of like a REIT with a wedge component, right? But we're not actually filing as a REIT, a real estate investment trust, because really we're planning on building the company and reinvesting equity, not distributing it. That way in the future, we can open up other verticals like medium and short-term rentals. We can create a branded hospitality approach when the time for that is right. We want to make sure we're building on strong foundations and not get into crazy Airbnbs when the Airbnb bubble is potentially popping in front of our faces, right? We're not buying homes yet because the real estate market is still plummeting. We have no idea where rates are going to settle. And we're not slice and dicing properties where we have this motivation to look for the highest cash flow properties in dangerous areas or shady areas, or take the worst possible tenants just to pump up a cash flow number and then sell it as like an NFT for a house or a token or a share in a home. I hate that because those kinds of things, just like syndications, very, very high fee, and they have an incentive to invest, in my opinion, in lower quality real estate. That's just my opinion. This is totally my opinion. Maybe that's exactly what you're looking for, and that's just what HouseHack is not. But to be very clear, HouseHack is a company where I plan to buy both apartment buildings and single families, though probably predominantly single families, in diversified markets in the United States, TBD exactly where, and we'll look for properties that we think we can buy for, as an example, $400,000 in a $600,000 neighborhood, and maybe spend $50,000 fixing the property up so we can get a nice long-term quality tenant for either long-term or even medium or short-term, depending on what's most appropriate at the time. But we want quality tenants, low turnover, in-house professional property management that we will handle. And the beautiful thing about all of it is we think we're going to be able to buy homes for $450,000 that are worth $600,000. That way we're insulated in case the market goes down. If the market goes up, we've got more equity. And in the future, we can slice out portions of the portfolio to retirement funds or whatever and get more funding to buy more homes. And so, in my opinion, this is a very simple model. It's not like we're creating some kind of widget that's like that big of a surprise. The hardest thing on me is going to be traveling to the probably 3 to 4 locations to start with that we're investing in, and basically be an expert in those areas. Now, I think I'm a very well-versed real estate investor. I've got a long background in real estate. That's how I got started. You could look at my real estate playlist and see all of my information about buying wedge deals, all the wedge deals I bought, the wedge deals I've sold, my theses on real estate, right? This video isn't for that. This video is instead to focus on, all right, Kevin, what's the monthly burn? That's what we came here for. All right, so let's just go through it and keep it very simple. So I think the easiest way to do this is just kind of delete things here one at a time, and then that way I can kind of undo the deletes, and we can kind of go through them in a way that I can explain them. So I have a little spreadsheet that I put together. This is not like unofficial accounting. This is just a very simple ballpark for everyone. I don't want people to hang their hats on this, right? This is not a guarantee. These are just ballpark estimates, and the numbers could be wrong, okay? But I don't expect they're too terribly far off. So Lauren, me, the board, we make no money. It's zero. Very, very simple. It's zero. Okay, then we do have an investor relations accounting person. They've got a lot of work ahead of them, issuing the stock certificates, making sure everything is correct, helping people make sure that if they're investing in their Roth or their retirement account, they're properly accounted for and they have certificates issued to the correct entity, whether it's an LLC or themselves personally or their trust or their retirement account. It's grueling, painstaking work to make sure everybody's situation is perfect, but I'm a big fan of making sure it's all perfect, so we're really investing money in IR to make sure that everything is perfect. So this is about a $10,000 a month expense. 1/3 of staff. So I have an individual who then helps with investor relations and emails and office work for 3 of my companies. And so we're only billing 1/3 of his salary to HouseHack. I think that's fair. And the nice thing about that is you've got somebody who really has their hands in all businesses and is really aware of everything that's going on. And the nice thing about that is not only do I feel like if we had somebody full-time just for this company, they wouldn't have enough to do, but then we'd be overpaying them, right? So we're able to kind of spread out their daily workload, which I think is really good. So 1/3 of them. Then we've got 1/3 of another licensed CPA that works for 3 of my companies. It's about $5,000. That's 1/3. Then we've got 1/3 of cyber expenses, utilities, computers, administration, rent, like office space, miscellaneous expenses, property taxes, insurances, you name it. It's probably about $3,000 a month. I think I'm being generous with that. It's a ballpark. We're still signing for new insurances right now. Like we're establishing our board and directors insurance. Like all of these things are it's a startup. So like some things need to be renewed, some things need to be formed, filing for trademarks, right? Some of these miscellaneous things, these are all things that I'm kind of lumping together here. So plus or minus about 3K. Then we've got marketing monthly. I think this is high, and so that way if my number above is a little low, this is probably a little high. We pay for the texting service. That's probably somewhere around $2,000 a month, and the email services like MailChimp. So that's that, and that's, we have to remember we have to market for investors to some degrees, to some extent, communicate with investors en masse, because obviously we would like to have more investors for HouseHack. Even though we don't really need more money for HouseHack to be viable, the more money we have, the more power we have in negotiations, potentially in the future when we want to buy from builders or conduct bulk purchases or whatever. We have more power to do that if we have more cashola. So there's obviously a benefit to expanding the reach for HouseHack investors. And that's also why we're doing the Reg A, which the Reg A is kind of a plus or minus TBD exactly what this is going to be, but we think it's going to be about $50,000. That's not a monthly burn figure. That's sort of one time. That covers like the audits, the filing fees, the attorneys, and everything involved with the Reg A. That's on top of the other expenses for starting the company, the Wedge Finder app, the Deal Finder, buying that, the startup costs for the initial legal fees and all that. That wasn't paid out of cash though. That was paid out of some initial stock. And so this right here is the Reg A, we expect to be plus or minus 50K. And the cool thing about the Reg A is it's going to expand our base to more investors who don't have to be accredited. We expect that to maybe launch, gosh, at this point, probably leaning towards the end of February, maybe early March. I'm still optimistic about January, but I think that's turning into hopium. It's probably Feb-March for the non-accredited. And I don't know that there's a massive, huge rush, but hey, look, if we have more investors who want to come in with the Reg A, I think that's going to be a wonderful opportunity for them to take part in the company. And remember, the way we're raising money for the company, the valuation of the company is roughly plus or minus, because we've got some small little adjustments for some of the startup costs. It's roughly 1-to-1. We can break all of that down, and we will probably when we do when we release the audited financials. And then we're going to have like a real audit, right? And that's cool because that's all going to be part of our Reg A filing. So this is more of just sort of like an interim little update here. And we want to make sure that we're as transparent as possible. But without having all of the exacts right now, we're not going to be able to go through all of that. But that is coming. So stay tuned for that big Reg A audited accounting. I just want to give you an update of kind of like, okay, where is money right now, right? Okay, good. So continuing on. Reg A, one time plus or minus 50K, all right? Travel right now is really next to zero. And that's because we don't really have a need to do much out of the office at this point. That we expect to change, though, in the future, right? In the future, there's going to be a lot of traveling, and we want to make sure we're as cost-effective and as efficient as possible while also actually being able to go, right? We don't want to be in a situation where, like, oh, you know, we're not going to go until 2 weeks from now, and we lose some flexibility on getting deals. So we have to figure out exactly how to be very flexible, and I've already got some solutions lined up for that, so I'm very excited about that, while at the same time keeping travel costs reasonably low. So if we add this together, not including that 50 sort of one time there, that works out to roughly a monthly burn of about $23,200. Now, we're sending out an investor relations update letter about what we have updated here, which is we have moved $21.5 million. Yeah, okay, I'll talk about that note. I put a little note there for myself to talk about this. We have moved about $21.5 million into a laddered treasury portfolio, and the fee we're paying for this laddering is so tiny. We could not do it. Like, for that fee, we could not do it ourselves. So we think we're in a really great, reasonable position. We're on $21.5 million of cash, which is not all of the cash that we've raised, but it's a large chunk of it. We are expecting to earn a rough yield net of fee, and this is plus or minus. Okay, I don't want anybody to think these are guarantees. This is just rough numbers. The rough yield right now net of fees is about 4.1%, which is kind of cool because on an annualized basis, assuming we can maintain that yield for an entire year, which we might not be able to, right? It depends. The yield could go up, the yield could go down. It depends. It's a laddered portfolio. Roughly right now, the net annual yield should be about $881,000, which is really awesome because the bonds that we're buying are bonds that we think will actually be worth more money when it's time to buy real estate. That's because when it's time to buy real estate, we believe, is when interest rates start falling again. When rates fall, bonds tend to go up in price. So if you're holding bonds and all of a sudden rates fall, your bonds at higher yields are more valuable. And so then you can actually sell them back for more money. That's trading bonds. We don't really plan to trade bonds. We plan to just hold a laddered portfolio, and then as they come due in like May of next year and July of next year and October of next year, we get cash, and then we could either reinvest that or we could buy real estate, which we want to buy real estate. We're just not exactly sure yet when the perfect time to buy real estate is. The point is, we're ready to strike, right? Like, this money, we should be able to dump it back onto the market if we needed to, the bonds, hopefully sell the bonds at a profit if we needed to, or we just wait for them to expire and roll off, which is fine because they're all short term, a few months out to a year out, some of them a little bit more, some of them a little less. We can just wait for them to roll off, and we don't have any market risk that way. That's really cool. And let me just clarify how that works. If you buy a bond today that has a 4% yield and it's due in October 2023, and you pay $1,000 for that bond, that $1,000 can fluctuate in value. It could be worth $1,100 one day, it could be worth $900 one day. Doesn't matter though, because if you hold it to maturity, that market risk goes away. You get $1,000 back plus your yield, basically. I'm oversimplifying because bonds are bought at a discount, and so you get $1,000 back, but that encompasses already the premium that you've... I'm oversimplifying, but that's roughly how it works. And so that makes our monthly cash flow roughly, no guarantees, things could change, about $50,000 a month, as we're just waiting for the market to fall in real estate, which it already is. Moody's is expecting home prices to fall 15%. They've already fallen 6 to 10%. Not only that, but I think Moody's is wrong. I think home prices are going to fall 15 to 25%. The longer rates stay high, the more pain we're going to have. We're starting to see, I mean, obviously 31% declines in year-over-year sales volume. We're seeing listing cancellations skyrocket, price drops skyrocket. It's just, when we get to March or April, we're going to see year-over-year numbers for real estate, and I think every headline on newspapers is going to be year-over-year home prices negative, and that's going to create a lot of fear for housing. So I think we're in a safe spot to be patient, not only because we're literally farming yield, but our burn for a corporation, for a company, is extremely low. Extremely low. I mean, there's like no burn, okay? And I want to be clear, the reason we can do this is because myself and Lauren, the board, and some core individuals aren't actually expected to get any compensation until after this company IPOs. So we'll at some point get some kind of stock options, and we expect those to essentially be locked up or not really vest until after IPO. We may never even IPO, but that's my goal, is to IPO. And then even after IPO, we don't want to just be able to let people with stock options dump at IPO, because I think that's the wrong way to run a business. So there should be some sort of strict lockups where it takes like 4 or 5 years to be able to fully sell, if somebody was even fully inclined to sell. They might not want to sell. I don't think I would sell all my shares. Like I love this. Like this is my baby. This is my dream. So I'm really, really excited about this. So super low monthly burn. The future stock options obviously helps with that. Oh, but what also helps is that I've got these other businesses, right? So I'm able to take accountants or staff and have them work on my other businesses while HouseHack is not really doing much right now other than raising money. So for example, we have 4 construction workers. They're employed by another business of mine. In the future, when it's time to start doing our in-house property management, all I have to do is go, okay, you're done over there. Whoop, now you're on HouseHack payroll when we're actually operating, right? And that keeps our cash flow low to basically, that keeps our cash burn low, very, very low, while we sit around and wait. And in the meantime, we're yield farming, which is freaking awesome. And so we're very, 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 very excited about that. Obviously, your incentive to invest in HouseHack sooner is your ability to get extra bonus warrants. You can learn more about that at househack.com or watch the HouseHack playlist. You could see that playlist by going to mettkevin.com/links. There's a link for the HouseHack playlist, or just go to househack.com. You should see the playlist there or the videos there. If you have any questions, you can always email us at ir@househack.com. You could leave a comment down below, is another option. But yeah, I'm excited. Stay tuned for the Reg A audit. I think that's going to be done in a week or 2. It's been going for like 3 weeks now. The auditors have everything. It's really, it seems like it's going great. And I'm very excited about that audit because then we put this entire company in front of the SEC. And we'll get to see what kind of comments the SEC has for us. They're pretty scrutinizing about real estate, which I actually think is a good thing for investors. A lot of people are like, oh, I don't like the SEC. I actually think a lot of what they do is needed. I think it's wonderful, so I'm optimistic. And I'm very excited about just the opportunities we have ahead of us. So I couldn't be more excited to buy real estate in the future. Also, I wanted to clarify, and I don't know if... like how hard I want to commit to this, but I'm pretty committed to this idea. Lauren and I, we have just 2 development projects left, and what we're thinking about doing is selling those, and then Lauren and I personally will never have rental property, tentatively again. I'm not like 100% clear on that commitment level, so that could change, but this is a conversation Lauren and I were having. We're like, why would we personally want any tenants? We don't want any HouseHack investor to think that, like, oh, we're scooping up deals before HouseHack. We're just gonna let the tenants be at HouseHack. And that's where all of our real estate exposure could eventually be. So, with the exception of like our personal residence and stuff like that. But yeah, we're very excited. So this is a full little update here. Ballpark numbers, obviously everything's subject to change. Read the solicitation at househack.com. And super excited to have you here watching and supporting the channel and supporting the endeavor. It's going to be fun. Thanks so much, folks, and we'll see you in the next one.